Here we go. We're live, and here it is. Once again, we're going to just kind of go through the NASDAQ 100, everybody, and we're looking for deflated puts. Now, when they were up here at $80.90 on what date? 11/20. That's not that long ago. And during the rallies we've had during this beautiful Christmas week, and today's date's 11/24/2011. Merry Christmas to all of you, and Happy New Year's. And the thing that we love doing is making markets. 880 on the markdown. That's $80 have taken out of premium MMTs. Let's go ahead and take a look at that 2100 there. Let's go up to another one that has a lot of open interest MMTs. That's going to be this 2025 put option. 21,000 contracts open interest MMT. That's down here at that 460 handle. They were up here above 60, and this is a weekly. That's 1, 2, 3, 4 weeks straight down going into that January, buying deflated premium and selling back to the public is what we love doing. Here's that. Here it is, MMTs at the peak down to the lows. There's that 21.25 put option. There's that 21.25 put option. Below that market at that most deflated area, MMTs. Let's take a look at that 21.50. That one was topping 100 5 weeks ago. MMTs got down to the bottoms down here. Put that on the list, that 21.50 MMT. Let's go right here to the 22.50. That 22.50. Whoa, MMT. Look at those highs up here. This was back on. I'm going to let you know that they had opened at $140 a contract on 11/20. That's exactly where that 22.50 put was when the markets were getting crushed. Now they've marked it down here over $100 MMT. 12/18, 1 month later, that's hitting our deflated price zone at $36. They opened at $59. They had a high of $80 during this last week, this Christmas week. Merry Christmas, everyone. And it's getting marked down. And the thing about it is, we have low fear indicators. We have, now that's a good one, MMT. Mark that 22.50 put option in there, MMT. MMT, Happy New Year to you, MMT. Here's one that we found, 22.80. And NASDAQ 100 closed at 22.87. Yes, it's the put side of the market that was marked down from the highs of 91.50 to a low of 57.60 on this weekly, and there's that last week. Look at how they marked that down. It's never been that low, MMT, and that's right at that strike price. Wholesale, sell it back. There it is right there, MMT. I'm going to let you see this. The ones that we like where there's very little volume is this markdown on a weekly markdown. MMT, the high was 79. Just so you know, that was back a long time ago. So basically, you had a markdown of 84.40 to 40.70 MMT, and they closed at 40.70. Those are the kind of markdowns that we like. Put that 22.60 put in there, MMT. That's on that NASDAQ 100. That's a big wholesale markdown. Let's take a look at the 21.75 again. Here it is. There it is, MMT, that high. That high, I'm going to give you the date, MMT, 11/20 week. That high was 106. Then they marked them down to 87. Then they bounced back to 105 to close. What some nice trades that was on this weekly level. But look at that markdown. We're down here now. We just hit a low of 1740. Now put that on that radar, yes. So what? 21.75 put marked down to what? The SMMT index master market maker in options and how to understand when markets are going to go up and reverse. We can come down a little bit lower, but these are going to be the greater opportunities because we've been in this Santa Claus bull run for a little while and the earnings are going to go down. Like I say, then why not get on that side of the market? But remember, the earnings start January 17th. Okay? Here is another markdown, MMT. We like this one. Yes, we do, MMT. That high was 116, and MMT, let it be known, Merry Christmas, that's a 2200 put. And that's roughly 87 handles below Friday's closing price. And a Happy New Year to all of our friends and all the people who learn how to buy wholesale and sell back to the retail public. Because, you see, eventually this is going to get really deflated and we'll have a correction and a pullback in the NASDAQ 100 and these will go up in value. This was marked down here this last week. You can take a look at the high was $55.50 now and the low was $22. Now that's another $30 weekly markdown to wholesale. So as this side of the market, MMTs get cheaper and cheaper, and I go back over here and I take a look at the monthly chart on this NASDAQ 100 here, is that if that 10-month moving average stays as resistance and I can't close above it, and I'm going to have in the middle of January when the earnings start, I'm going to have not that good of an earnings season for 2012. And not only that, MMT, I'm going to be happy enough just to show you so that you can see. There's that monthly chart. I'm going to take another weekly chart, MMT, and what I'm going to do is let you know that your upside resistances on the S&P and this weekly NASDAQ 100, look at here. That 10-week moving average, if it crosses over, meaning that this NASDAQ 100, it's acted a certain way on a weekly level. And you can see that 2200 level, and but you can see that reversal just from there to there. Not only that, you can see where these top reversals were during this period of time before you make that lower low. Straight up to sell it, but here, look. The thing about it is if the 10-week crosses over the 50 and goes down in value and you close below in 2012, you get below these key weekly moving averages, you're going to go down in value and you're going to break these last lows, and that's going to be 2149. So MMTs, when we're looking at these wonderful, wonderful, wonderful NASDAQ deflated put options on the index. Once again, it's a master of wholesale price. Always. And that's why we do what we do, and we do it well. What we will be telling people is that this last rally was much stronger as it was. But the weekly moving averages are pointing downward. And at the same time, you got this big weekly rally. They marked down the $2,200 put, 30 some dollars. And when I'm buying back below the market and then selling back as a market maker to other professionals or public, it doesn't matter. That's what an MMT does. And that markdown is your profit, because when we get the next reversal, whenever that comes, the prices are deflated in value. And look at the double week markdown. Look at the peak. Look at that high right up here. That was $63, let's say. And look at the high this last week where they marked it down. We already know $55.50 down to 22. They marked it from $63.60 down there to $22. That's another $40 and some change, 43 or so. Doesn't matter. Wholesale's wholesale. The people who bought them, they didn't know how to get out here. That was a great trade. I mean, these went from 50 to 100 when the markets were selling off hard. And it's a put option, MMTs. Merry Christmas to you. Once again, MMT, the weekly resistance levels So when you have this up week right here, of course, they marked that put down, you see. But the week before that, you went from the bottom up to the top when you had the bigger down week. But let's take a look. It's a holiday now, everyone. Happy New Year to you. And 2012 is going to be very vulnerable. And the reason why we're looking at it is because you're going to have a lower growth environment, and using longer term out below the money and various different techniques that are used, that the upside has got a lot of resistance. And I will remain selling into resistance and marking this side of the market for entry based at these key resistance levels moving forward into 2012 on that short side, and on the bull side we'll be doing it on that side as well, just the opposite of what we're doing here. We've already done the call side for the Santa Claus rally. Now it's time to get the put side. Here you go, $2,200 put marked down, wholesale. Here, weekly, NASDAQ 100. Okay, you got to close above 2287 on that NASDAQ 100, and you have to consolidate it, and you have to break out up here to that trend line and blow through there. We don't see that happening in the first part of 2012, not on an earnings basis, and not, yes, we're going to come up and sell into each one of the resistance levels wherever they want to go. And yes, the more they mark the market down, the less risk we have. When we do get the reversal, our entries are very wholesale. So we're taken out of the risk by marking down the asset or marking that put down. Now, on the flip side, I'll show you just something that you would like to know. And let's take a look at the other side of the coin. And here's that coin. I'm sorry, but let's just take a look at it. The $2,200 call contract, which is a January one, they'd marked them down, and they marked them down, and they marked them up last week. This is that $2,200 call. That's 87 handles in the money. When they get inflated, they go down. When they get inflated again, they go down. They got deflated, and then they popped them. And they popped them from that low was 67.96, and that high right there during the Santa Claus was 107.7 up there on the high. Even if you only bought one, you buy 10 contracts, you make a lot of money. That's just how it is on that call side. But listen, the call side is getting marked down, and I'll show you another thing. This is a 21.25. It's a call option that's deep in the money. But look at the markdown that it got. It got marked down. And the people that were in these calls back over here, MMTs, look at the call side. I'm going to show you that we trade in these because they make money. But listen, when they went from $271 down here to the low of 119, for crying out loud, this was back when we were doing these trades, they got to $119. So they were marked down from 271 to 119. Buy them, sell them back to the public. And knowing how to trade the calls at times for the pop off the lows and selling into resistance, buying the calls at times at the lows. The low here was 128, and then they went up to the high this last week to 166. That's phenomenal. That's over 30 some dollars trading right there. Even if you have one contract, it's $3,000. If you got 10, it's 30,000. Doesn't matter. They're always tradable. That was in that call money. It's still being marked down. That's the moral of the story. Now, when you take a look at the same contract on the put side, the 21.25 put right here, you can see that this one has been marked down. So what the public doesn't realize is both sides get marked down, and then there is market making that we do that's different than what the public does. This side gets marked down too. And okay, so when this side keeps getting marked down, I buy that, but I buy that marked down too. So I can buy the call side when it's marked down and sell it back to the public. When the call was marked down, I buy it and sell it back to the public. There's nothing wrong with that. And same thing on that side of the market. This is the side of the market to be looking at in the last week and going into 2012. And this is the actual contract, 21.25 call deep in the money. They got marked down big time. and I mean marked down. And this is where you wanted to buy that marked down. And that's where they were tradable. And intraday, on an intraday level, they move good. So we're just showing you the balances between the contracts, MMTs. So you can see the highs, those lows, 21.25 put. That's well below the market, MMT. And if they mark this thing down to $6.5, $8.5 next week, we'll wait for next week to get here. Enjoy that turkey, that ham, and all the other beautiful things that most people have told me they're having on their menus. Enjoy your Christmas and be ready for the calendar 2012, and we hope to see you back soon. Learning trade management and opportunities with NASDAQ 100, and that's this one last time, and we already went over the chart. So my point of it is, how do I continue to make money within bear and bull market cycles?